Hi friends, welcome back to the channel. So the CPI data is out and let's take a look. Inflation eases to 6.4%, but pace of moderation slows. So basically this is just telling you that things are still expensive, and it's not really necessarily a blowout to inflation to the upside or the downside. However, it's not going anywhere, right? And we can look at some more headlines here. Consumer price increases slowed, inflation cooled annually, but the details are more worrying. Takeaways from a report that showed inflation's alarming staying power, and don't expect inflation to just come down right away. Part of what's going on is you got housing is still high, food costs are still high, and the labor market is still strong. You're gonna have to pay people money to come back to work essentially. You can see like a long-term chart here. We're at 6.4, core inflation 5.6, and this center chart sort of gives you a general sense of like, where have things been in the past. So, back in the 80s, we had like inflation in the double digits. You can see this 80s, actually 70s days, I should say. And, we are probably peaked, at least when you look at the chart. We're not at like the 9% or double digit levels. And I remember in Europe, they were like at double digit, and in the EU and things like that. So, things are cooling off, but there does seem to be some staying power, and this is essentially, as you're going to see from headlines, the Fed's going to need to raise rates and keep them elevated as they've been saying. I can't read the future 100%, but the data just came out, and inflation still, what was it, 6.4 is what we're talking about here, and here's a headline here: U.S. inflation stays elevated, adding pressure for more Fed hikes. We've been talking about this. The predictions before in the market were anywhere from 2 rate hikes to maybe 4. And then the other issue is, as well, is, are they going to cut this year or not? I've never said they're going to cut this year. And I've always mentioned to you guys, like, sometimes some people in the market are betting that they're going to cut. I don't have any indication from the Fed at all of that. So I don't have any reason to think they would cut. Also, too, you can see here, stocks fall as traders up bets for more Fed hikes, right? Here's a breakdown, a chart of like some of where things are expensive, not expensive. So this was an interesting one from this last month. Piped utility gas service up 6.7%. So if you guys have any comments on these things, love to hear that. Piped utility gas service has risen. Gasoline all types 2.4. Motor vehicle insurance 1.4. These are things that have changed just from the month to month. Medical care is up. Apparel, which would be clothes. People were saying those headlines as well, as like eggs are up a lot, and actually, we noticed that the other day when we went to the store, and this is just, I'm talking here in Korea. Eggs are just like freaking expensive, and we're a bit. Excuse me, I'm coughing how expensive it is. No, but we're big egg eaters in this family. I have eggs for breakfast every morning. We have eggs for lunch, eggs for dinner. We actually, just part of our diet is we eat a lot of eggs, so it's pretty noticeable to us. Tobacco and smoking products are up, but I guess the things that are, less cheaper, or at least falling, is in airline fares. Used cars are cooling off a bit. You have fuel, oil, fruits and vegetables, and physician services. And then new vehicles aren't necessarily going up as much. Food away from home is still elevated. I mean, things just cost money. The things that stood out to me as well, I was looking at this. This is your bond yields, essentially. And what stood out is like the 6 month is at 5%. Because right there. The 12 month, 4.96. So, 2 year to 4.63, the 2 year is still above the 10 year. This is like a massive inversion here. The 10 year is at 3.78, and it's like, if let's say you're a trader and you just doubled your money on Tesla, like for example, that's been the hot stock. So like if you timed it perfectly, you doubled your money. I mean, you could just literally sell, take the money and run, put your money in like a, say, 12-month bond or 6-month bond and get like a guaranteed, 5%, something like that. I mean, why not just take that money? So, for me, this should put pressure on stocks, that we know that inflation is not going anywhere. Bond yields, look attractive. You can see like this thing is spiking. It is what it is. And I don't know. It's cat. Costs just aren't going anywhere, right? Egg prices jumps 8.5%. Here's another headline, and you can read it here. Food prices weigh on senior savings, health, and even social ties. It's just expensive. And, we had we talked about it last year, but they announced it was like Social Security VA benefits, these kind of things, they rise with inflation. It was like the largest increase of sort of fixed income costs, or fixed income essentially, in many years. I can't remember what exactly it was, but I remember reading about that. Because when these things are tied to inflation, right, you get a cost of living adjustments, a COLA. So it's just not enough still for some people. I'll give you another example. The one chart was saying that, just say month over month, maybe new car prices didn't go up that much, but when you read these kind of headlines, new cars are only for the rich now as automakers rake in profits. And if you dig in the details, the basic idea is that car companies, right, they're going to be switching over to EVs, and these are essentially higher cost vehicles. And if we all know that's the future, you might as well switch over your production costs. And then the consumer's just like, crap, if I don't, I can't afford a new vehicle, like a new EV for whatever, $50,000 or whatever it is right now. It's like, what do I do? I guess I have to buy used, right? So the way the new cars could be, there's a possibility if, let's say, everyone goes EV and just more expensive, it just prices out lower end consumers. And there was an interesting chart here where this was just showing, before we were saying that the new car prices didn't increase that much, say month over month. But if you look at more of a long-term trend to where, this chart is showing you like the past 10 years to where new car prices just have spiked. You can see it right there. I mean, it's just like a spike in increase, right? There was flat for a long time, and suddenly had gone up. And it reminded me of this other article. I didn't mention it because I don't talk about Britain that often. But this one was really something that came out recently. Was London bus drivers accept 18% pay rise after a series of strikes. And I was looking at that and I was like, what the heck? And essentially for some workers, if they haven't gotten a raise for we'll say 2 or 3 years, something like that, and prices have been spiking, like obviously you would strike too. I won't say obviously, but you would be unhappy with your pay too, as I'll put it that way. And the disconnect was so large that they were like getting an 18%, and some even wanted more. And so this shows you how, like, think about if you're a company, in this case, like it's the bus drivers, and essentially would be, I guess, government, I would think. But regardless, right, if you have to start paying your workers, a certain sum to get them to come back to work, it raises the cost of everything, right? And it just keeps things elevated. It's a tough cycle to break. That's sort of why you see inflation stay elevated. It's like that doom cycle, right? Companies got to pay people more money. Then they got to say, okay, now we got more costs. What are we going to do? And then if you ask companies like, so for example, Tyson Chicken, Coca-Cola, Pepsi, those kind of companies, they just pass the price on to consumers. Or there's a thing called shrinkflation. If you don't know, they just essentially, like for Coca-Cola, for example, they'll put less Coke in the can, just for example, or they might put less potato chips in there. Like the bag of potato chips will look the same, and this is something that they do all the time. And essentially, what you're doing is you're buying air, and it's a struggle out there. I do think there's going to be more layoffs. We just talked about just the other day, Twilio, was it? I can't remember the percentage. I think it was like 70% were laying off their staff. And I was seeing another article that popped up. It was Ford was firing people as well. It is a scary environment. Now, on the more bull side, I am actually shocked though that the market is so resilient. It just is. So we haven't seen a crazy sell-off yet. Now there was I think it was Mike Wilson. I think he's over at Morgan Stanley. He was saying he expects the bottom out to be in the spring. Well, we'll see. And I have the same opinion on this stuff. You can't rely on the markets for everything. You got to be thinking about your career. And the market's just one part, of your strategy, right? You have to become income coming in. You want to control your spending, and setting some money aside, be it bonds, be it stocks, be it just regular old savings account is totally fine right now, because the yields, I should say, savings account APRs is like pretty good. I've been seeing some saving accounts are like 4% just for a savings account. The other thing you can do is CDs, right? If you want to lock in a certain rate. Anyway, so that's it. So I'd love to hear your thoughts on the CPI data. And in your neck of the woods, are prices of say, renting places out, are they going up or down? Just, you can share in your market. There's actually an interesting chart here. I can just pull it up here. Yeah, here it is. This is sort of where inflation is cooling, where it's not. Evidently, inflation is still high in the Mountain West, right? So if you're living in that part of the country, you're feeling the most pain, evidently. Just things are expensive. So anyway, please share your thoughts. Thank you guys for watching, and catch you guys in the next video.